Good afternoon. Today is Thursday, July 10th. This is Todd Mitchell for the free videos, and I am looking at the stock CNX, Console Energy. Okay, I think there's a beautiful trade setup for tomorrow. Look at today. Tight little inside pattern here. All right, back into the gray action zone. All right, ready for an explosion, either up or down. We don't know if it's going to go up or down, but even though this is a trade setup, doesn't necessarily mean it's a trigger, right? So the trigger will be for tomorrow, as assuming today's high stays today's high, it's 43.98 is the high. So assuming that's in play, I mean the market closes here in about an hour and a half. As long as 43.98 stays in play, we're looking at a 44.08 buy. All right, so we're looking at 44.08 for tomorrow. If you want to do the calls, you can certainly do the calls, but you use the underline as the trigger. So as soon as this market hits the price of 44.08, you could buy the call option. I would do an in-the-money call option. I would do about a 42 or a 43 call option. I would go out to August expiration, but be aware, this stock reports on July 24th. July 24th, which is 2 weeks away, so we got plenty of time. We're looking for a bounce up in here. Let's see if we can get that. Let's digress a little bit and talk about yesterday, what I talked about yesterday. Remember yesterday I said that TNA, the ETF TNA, had a potential setup, right? We had an inside pattern yesterday. I was looking to buy it up through the high, but of course, as you all know, the market gapped down considerably today, about 150, 160 points in the Dow, okay? So that did not set up for what I described to you yesterday. But in a minute here, I'm going to show you a beautiful day trade, the TNA. Okay, again, TNA is the small cap bull 3 timeshares. There's a beautiful trade to the upside. Caught a couple points in that today, and I want to show you that in a second. But let's first, since we're looking at daily bars now, let's look at Facebook. I also outlined Facebook for you yesterday, and yesterday we had a tight little, well, not a tight bar. It was actually a bigger inside pattern, right? But we were looking to buy it as the market traded up through yesterday's high. Yesterday's high was 65.12, so 65.22 was the official buy on this, okay? We're at 65 right now. Market rallied up to 65.34. Of course, with the overall market, this stock opened up lower and barely took out yesterday's low, and then it reversed, of course, and traded up through the high. So what we're seeing here is not yesterday was an inside followed by today's outside pattern. So I still believe this is a good trade. Your initial catastrophic stop loss on this, if you took advantage of this trade, needs to be 10 cents below today's low of 63.05 to 62.95 is where your stop should be right now. Okay? I also talked briefly yesterday about Goldman Sachs. Look at this. Goldman Sachs opened up lower, right at the 200 exponential moving average, and we've rallied since opening, obviously, with the overall market. And you could have traded this pretty much out of the gate if you're day trading to the long side. But let me quickly show you the TNA long trade that we took this morning so you can learn. All right, this is the trade setup. This is a 3-minute chart on the TNA. Now, you could have done this with the SSO ETF or even the E-mini futures. But since I was focused heavily on the TNA, right, since the daily chart set up so beautifully for a buy, and it was the Russell is pulling back further than the E-minis. I was focused on the TNA, okay? So this is exactly what took place. So especially when you get a gap of this magnitude, you're looking for this classic gap play, okay? So we closed at about 77.5. We opened up at 73, way down in here, okay? So what I'm typically looking to do, especially when it sets up off the bigger time frame, is I look to a smaller time frame, the 3-minute chart, to position myself. So what I do in a situation like this is I wait for the first 3-minute range on an ETF, right? 3-minute range. This is a 3-minute bar. Okay, so the high of the first 3-minute bar was 73.33 and the low was 72.31. So I was buying up through the high of the first 3 minutes by 5 cents. So that gave me a price of 73.38 is where I was buying long. With my initial catastrophic stop, the ISL was 72.26. So my initial risk on this trade was $1.12. Not a whole lot, considering we're looking for a potential bigger move to potentially fill that gap, right? So I wrote it all out for you, okay? Bought it at 73.38. My initial stop, 72.26. My risk was 112. Okay, so when you put on a trade like this, you need to look at your risk, and I call, so my R, my risk on the trade, which up here I say R, right? 1R. 1R is my risk. That's my risk. That's $1.12. Okay, 2R would be 2 times the risk. Okay, so my first profit target, take something off the table, is 74.5, right? I took the 112 and I added it to the 73.38, gave me 74.50. And then I took 2 times the 112, which is $2.24, and I added that to the entry, 73.38, which gave me 75.62, okay? Let's take a look at what transpired. And again, ignore everything that you see on the chart because it's a pure price action play, okay? 74.50 was my first target. 74.50, we hit 73.97, came back close to stopping us out. Got to hang tight on trades like this, right? We got our objectives in play. Look at that. 74.25 came close in the blue action zone, but again, you can't get deterred because you're going into these action zones, right? You could take something off, but again, you want to remain disciplined and patient. So look at how the market rallied. Finally hit 74.50. Our profit target was hit right there. Okay? So our first profit target was hit right there, right below that 50 exponential moving average. And we were looking for a 2R, the 75.62 on this day trade. Look at this. We kind of came down. Let's see what happens today. Again, we're looking for 75.62. That is our second profit target. Not quite there. And look at this. Rallies up. 75.52 right here. Now the bars turn green. Now we're clearly above the gray and the blue action zone here, which is looking beautiful. And there you go. Take a look at this, folks. It doesn't get much better than this. Look at this big bar here. Took us out. 75.62. So that was a good trade. It's something you can learn from when you get the big gaps. Okay? Your risk is very limited, right? To exactly how I described it here. Very limited risk. When you get the big gap opening like this and it corresponds beautifully off of a daily chart, which it did, right? Because we got the big gap down right in here. Look at where we gapped down to. We gapped down into the gray action zone off the daily chart. Again, put this back on a 3-minute chart. And we had an exact plan of action, which is very, very important. We had exact targets and exact stop level. Okay? Hope you learned from it. And I will be out of the office tomorrow, so make some money, and I'll be back with you on Monday. Bye for now.